All right. Good afternoon, everyone. So, as you probably saw, if you looked at the last video, things did not go the way that we expected, but it was a learning experience, and I wanted to share that learning experience and aha epiphany moment with you all. Again, in doing this, we learn from our mistakes more so than our successes. At least I do, and that's how I've been able to gain a lot of the knowledge that I've gained over this period of time by making mistakes and learning from them, and then applying what I've learned and becoming better. So, what I learned yesterday is in doing the technical analysis and looking at the charts, and as as I was analyzing price action at the time, because that's what price action is, right? What price is doing at the time, the data and information was skewed in the way that yesterday was not a regular trading day, as all, if yeah, most, if not all, of the equity markets were closed yesterday to the Juneteenth holiday. So basically, what that meant was there wasn't as much volume in the market as usual, right? So the price action that we were seeing wasn't the usual price action, for a Monday or a regular trading day period. So in our analyzation and what we were seeing. So as we were analyzing, everything that I analyzed was actually accurate, but uh, not taking into account the lack of volume and the lack of it being a regular trading day, led to basically skewed data and skewed analysis, for that matter. So as we were seeing, so typically, when you get the rejections and everything, that indicates, especially at key areas, right? That indicates reversal points and things of that sort, and give you confirmation. So all of the confirmations, the analysis, and everything that I did was correct for what was going on at that time. But one of the things that I noticed is that the reason that price wasn't able to, one, push through this resistance area is because there wasn't enough volume in the market. The exchanges weren't open. A lot of trades, buy and sells were not happening yesterday like they would regularly happen. So, in looking at the market, yes, did the analysis based off what we were seeing, but what we were seeing was not typical of a regular trading day. So, I wanted to make sure I brought that to you all's attention, and gave you that learning moment, for myself, and hopefully it can help you out in the future and also help you to understand. Well, it helps me out because, again, I won't make the mistake of analyzing data, based off of an irregular market or time period. So that was the learning experience there. So as you see, obviously price pushed through this 4 hour resistance area right here. Now it's pushing towards this daily resistance area. And so what we would look to do is we would look to see, how price reacts to this daily resistance area right here. When it gets here, we'll look to see if it pushes through, or if we get a rejection, a clear rejection, clear sign of rejection, similar to, one of these long wicks, or what have you, before price makes its way back to the downside. And we'll definitely put out confirmations and everything together, if and when that happens. So that's off of rejection, right? But then also, price has the potential to push through this daily resistance area. So let's say we get a breakout, price pushes through this daily resistance area. So what we will look to do is, and you can do this, a couple of ways. So you have some people who are breakout traders, so you can trade the breakout if you want. Um, look out for the pullback, and then the continuation. That's one way to do it. So once price breaks this daily resistance area, if it seems pretty bullish, then you could probably get in, for a buy trade for a continuation to the upside. That's one way to do it. Another way to do it for our more patient traders is to let the breakout play out, right? to make sure. So if we have a breakout candle, especially on the 4 hour, if we have a breakout candle on the 4 hour that's pretty bullish, um, that's a good one to put to indicate a good buy, some good bullish buy strength. But then you can also look at one where we have a good 4 hour candle that breaks through. Again, you want to wait for it to close because you want to make sure it's not one that breaks through and then before the candle closes, starts to reject, right? So you can find yourself on the wrong side of the market if you try to trade a breakout candle that does not finish, right? Because if you don't allow that candle to finish, you're not exactly sure which side of this. You're not exactly sure which side of this resistance area that candle is going to finish on. So you can play it patient and wait for the candle to close, and if it closes still with some strength and breakout, then that's a good indication for some good bullish strength for the continuation. But if it does not, if it rejects, then we want to see what happens. We want to see it reject this area altogether to give us indications that the market is going to reverse. And then we'll look at some confirmations to give us confidence to get in that market for a sale and trade the reversal if that's what we're getting. Now, let's say price breaks out altogether, and for our more patient traders, it breaks out, right? And you're the type that tends to trade the pullback. So you let it break out, and you wait for price to come back to this resistance and test it as support. See, that's what you want to see. You want to wait for it to break out, come back, test this area as support, this resistance as support. And if it holds up as support, you wait for your confirmations to enter into a buy to continue to the upside. And I will tell you, a lot of times, those are the trades where you can get quite a few pips and make a lot of money off of trades like that. All right, so let's take a look and see what we got going on. I want to show you on split screen what this looks like. So first we'll look at split screen and we'll look at a couple of other things. So, all right, so this is the 4 hour split screen. I have some different indicators on here. So here I wanted to point your attention to the RSI. So the other thing that I took into consideration yesterday, and for those of you that are familiar with RSI being the relative strength index, right? And basically the way I use the RSI is basically to tell me the strength of the move, the strength of the direction of the trend. So after I did the video yesterday and I was continuing to do some analysis, I went over and took a look at this particular chart right here to see my RSI. And basically what I found was that if you look, especially on the 4 hour, right, price is hovering, is over this 50 area, right? So typically for those of you that's familiar with RSI, and even if you're not, what that means is the trend is bullish. So if you're going to place an order or a trade, you want to place a buy trade because that's the strength of this current move. It's the strength favors the bulls or buy trades more so than sell trades. So any sell trades that you get are going to be either pullbacks or potential reversals, right? But what we're trying to do is we're trying to trade in the direction of the trend. So anytime you have your, so this is a 14-day EMA. Or SMA. This is your smooth moving average, and then this is like your 2 day moving average, just to kind of get a idea of price movements in 2 days versus 14 days, or what have you, and price and how price is reacting over a shorter period of time and then a longer period of time, right? So again, price being over the 50 mark is a show of strength to the side of the bulls. Price being under this 50 mark is a show of strength in the direction of the bears. So sell trades are basically where you stay in the game, or more pips, bigger moves and things like that. So what we like to see is we like to see price to come all the way up here. So typically when you get over the 70 area, That's when a lot of people like to say that, price is basically in this area, we're looking at overbought, right? Overbought. And so eventually you're going to start to see price fall, and you can start looking for reversal trades when price gets over 70. As you can see, previous price went well over 70. So that's why you want to wait to get that strength. So look, when price finally did fall, right? Look at what it did. It was a show of strength, absolute strength right there. And that's what you want to see when you're looking to get in on reversals, right? Versus our pullbacks. And you see how price pulled back to that 70 area, and then continue to make its continuation to the down move. But as time goes by, we will analyze this as well. Make sure we're taking a look at the RSI to show the direction of the trend, the strength of that trend, and everything that we just talked about right here. So again, right now the RSI and all indicators favor the bulls. So once we get a good indication that price is looking to reverse, we'll start talking about that and looking at those confirmations and so forth, right? So just wanted to point that out to everyone, give you something additional to kind of look at. Now it's later in the day, and typically later in the day you're going to get lower volume as the London market closes, and all we have now is the New York session open. So that overlap of sessions isn't giving you the volume that you once was getting earlier in the day. So that's something to look out for when you talk about volume spread analysis. So not as much volume in the market right now as there was earlier in the day. So obviously not a good time to place trades, but it is a good time to analyze the market to kind of get an idea of where we're going and what we're doing. Okay, so I'm gonna go ahead and take this off, put it back on our single chart here. All right, so again, basically we're watching price for GJ approach this daily resistance area, and we're going to see what type of reaction we get as it gets to this daily resistance area, right? Are we going to get a rejection? Are we going to get a, continuation breakout? What have you, and we have a good plan for whatever price tends to do when it gets to this area. So whether it rejects, whether it breaks out, pull back, all that good stuff, we have an idea of how we want to trade it once it gets there. Another thing, one more thing that I'll point out to you before the equity markets close for the day is this right here, and I've pointed this out in previous videos. These are the indexes for each of the major countries and currencies, not pairs, but the currencies individually. And one of the things that give me confirmation, this can sum up your fundamental analysis all in one shot and one looking, right? So as I look at the Japanese yen is very negative. It's highly negative today, which means that it is very weak. And then the British pound is pretty strong. So when we look at the change rate between the two, it's a no-brainer. It's an absolute no-brainer. The yen is absolutely getting destroyed today. So that lends to what's going on with the pair, GJ. It's bullish, obviously, very strongly bullish, because as you can see, the British pound is very strong in its change rate in a positive direction, and the Japanese yen is very weak in the direction, in a negative direction. As far as the strength of its currency. So another tool to put in your toolbox to quickly analyze the market when it comes to fundamentals. You don't have to necessarily look at the news and all that stuff. This right here sums it up all in one shot. Or what have you. So, easy way to get the fundamentals and give you confidence in your trading, what you're saying as far as your technicals. Fundamentals and technicals, should complement each other. When you got that, it can give you confidence in your trades and everything. So, like I said, these equity markets exchanges are about to close here soon. So these are all going to stop where they are until 8 o'clock in the morning. They'll open back up, and then you'll see the market continue to roll and do what it does. So again, throughout the day as you're trading, you can take a look at these currencies individually to kind of see the strength and compare them as you trade your pairs, to give you confidence or confirmation of what you're seeing with your technical analysis. That is all I have for you for today. If you have any questions, feel free to put them in the chat. If you like the video, please, by all means, thumbs the video up. If you're not subscribed, subscribe to the channel. And I look forward to bringing you some more information, good, bad, or indifferent. I'm going to give it to you just the way I see it. I have no problem with coming in, verbalizing and showing my mistakes and, showing you what I learned from them. You can't learn if you're not willing to make the mistakes. But when you make the mistakes, right, we want to make sure that we learn from our mistakes, and that's what's going to make us better traders. That's what's going to make us stronger. That's all I want to do for myself and for you all to bring it to you straight, raw, uncut, and as transparent as possible. So I wish everyone well and good trading. Thank you.